Hey traders, hope you had a good day today. So the most notable thing for me today, aside from your standard everyday go up that we've been seeing for the last few days in the broader markets, was I got a message today from the mother of a childhood friend, and I have not spoken to this woman in at least 15 years, but she messaged me asking about how to put $2,500 to $5,000 in the stock market and what suggestions I had around that. So for me, that's an indicator, just like anything else on social media or watching, the psychology of the herd. And to me, that definitely means I view it as a boat. And if everybody's on one side of the boat, we look for things to get a little bit lopsided. And of course, we know that at this point, which is why the VIX keeps going up. Everybody's looking for daily consolidation. It's just not happening. Higher low every single day on SPY, 8 days in a row now. QQQ, same thing, 8 days in a row. And you can find a lot of individual names that have that same 8-day in a row pattern. So at these levels, if you have long-term holdings and a long-term portfolio, you have some kind of game plan in place where you are stopping out by walking up a stop loss level, or you are hedging to protect those positions against any downside, which again is why the VIX is going up as the market is going up. Otherwise, you're watching with cash and looking to buy the dip, because again, SPY can pull back 5% from here and just be looking for a daily higher low. So we're then looking for our first hourly and first hourly oversold conditions on SPY, QQQ, and a lot of individual bulls that have been extremely strong. And that's what we call our back burner trade strategy. And again, I put a video out on YouTube over the weekend about that. So check our YouTube channel if you're interested. Another note is we have a more in-depth ebook than we've ever put out, and that's on our website. Just go to TheChartGuys.com, and there will be a pop-up if it's your first time to the site, since we loaded that ebook up there, and that will be sent to you. Some good information in there. Let's get into it. So again, all I care about at this point is the higher low every single day pattern. And if the bulls can hold 349.24 tomorrow, that pattern remains intact. We're in blue sky breakout. We closed at the high of the day, and there is no sign of weakness whatsoever at this point. IWM, good save by the bulls. 154.63 support did break, but it only broke by 18 cents. And here we are back up at the recent high. So what this is doing, it's a little bit choppy on the daily, but it's keeping the weekly consolidation healthy, and it's keeping it a potential weekly bull flag. If we break the low of consolidation, 153.60, the odds of a weekly bull flag will drop. If we hold that level, then it's a bull flag. So it's a very simple statement, and that's how I trade bull flags. And I'll go over a trade example I took today on PENN for an hourly bull flag. But essentially, it's entering ideally as close to that low as possible, putting a stop under that low, because if it breaks, it's not a bull flag. And if it holds, it is. QQQ, bulls keeping their complete control at this point. Pretty astounding, but we're getting used to it at this point. While we're getting used to it, we want to ensure that we're not getting complacent. Again, a lot of traders are going to forget their rules about risk management in this market. And that is going to lead to a rude awakening eventually. But again, the last thing you want to be doing is saying, I don't need to use stop losses because it just goes up after I get stopped out. In this market environment, sure, maybe, but we're going to change market environments eventually. And if you have that habit as a trader, you will get back a lot of the profit that you've been finding on the way up. Healthcare sector, look how close we were to breaking this falling wedge bearish. Healthcare sector stood out in the red today. A little bit of an end of the day. Buying of the dip did show up. Daily higher lows are still intact, but it is still a rising wedge that we are watching, and we are very close to breaking bearish from it today. We're looking for an hourly lower high to be set on this bounce, and we will have to see further downside and a loss of the daily higher lows if this rising wedge is going to get any bear follow through on its break. SMH broke it bullish. So NVDA, AMD, those individual names remaining very strong in the semiconductor space. And again, this market environment has not been favoring rising wedges breaking bearish. Doesn't mean we don't pay attention to them, but the probabilities of bear breaks of rising wedges are much lower here in the summer of 2020 than I've ever seen as far as the broader market is concerned. Biotech sector, still watching this 4-hour falling wedge-like pattern. We knew the bulls were way overextended yesterday just because we did not consolidate on the hourly time frame much at all. Got a lot of that consolidation today, and now we're watching for a 4-hour tightening range. So low of the pullback, high of the bounce. We're scouting a higher low, and we need to see the bulls change the daily trend by holding 106.77 and breaking 112.35 to change the daily trend. So SMH bull break, blue sky breakout, creating more space for a daily higher low, anything above 171.84. And this rising wedge is not going to break bearish because it just broke bullish. The VIX still holding on. So again, we're still seeing a slightly elevated VIX than what we've seen over the last few weeks. And that is showing us that everybody knows to expect the pullback. We're just not seeing it. Short-term resistance, bulls need to get over to 27.10 for another leg up. The dollar, trying to bounce bullish reversal candle on the daily. We know we need to change the 4-hour trend for it to mean anything. So either a 4-hour trend change or fail for the bulls through tomorrow. That's what we have to see. If we change the 4-hour trend, we zoom out and we look for anything under 93.47 as a daily lower high. We are watching this pattern. And keeping a close eye on it. Yes, it's a falling wedge, but bulls aren't proving much to us at this point. Keeping a close eye because the dollar bounce today led to the gold and silver bull momentum being deflated. We had some nice bull momentum to start the day from overnight last night. Dollar saw another leg down into this morning. Here's the daily equilibrium we're potentially watching. Is our daily lower high set? Maybe. If the low of today, 1963, breaks tomorrow, that will be a daily lower high. And we'll then be focused back on 1902, might as well just call it 1900, as the most important support level. If we see a red day tomorrow in the metals, we can stay in gold within this tightening range into next week. Silver broke it bullish, obviously no follow through at the moment, but that is a bull break. The daily higher lows remain intact, and anything above 26 keeps the daily higher lows intact. The fact that silver broke bullish increases the odds that gold and miners can break bullish as well. That being said, red flag on GDX today. Daily bearish engulfing candle. A lot of traders look for the miners to lead the metals, and we are watching the daily equilibrium. And if you've been watching these videos for a month, you know that ever since about right here, we started anticipating a daily equilibrium was the most likely scenario due to the size of the pullback and then the size of the bounce, creating that wide range. And the result of high volatility with a wide range in both directions and a significant retracement from the initial move is to look for equilibriums. So that's what we've gotten, and they've been great on gold and miners. It was good on silver. It has broken already. The tighter the better when playing breaks of equilibriums, in my opinion. Oil still a rising wedge. 12-hour time frame is giving us a little mini equilibrium. So high, low, lower high, higher low. Maybe that lower high being set. Inventory report tomorrow is going to determine whether we get a bear break or whether we head up to test the recent highs. So either going to confirm the rising wedge bear break or hold on. 10:30 a.m. Eastern. Watch for that volatility. Natural gas bulls losing momentum. 2414 is still a key short-term support level. Daily time frame. Uptrend higher low is 2396. If we lose 2396, we lose the daily 12-period exponential support for the first time. We lose the daily higher lows, and we zoom out and look for a weekly higher low. And we have not consolidated in over a 50% move on the weekly chart. So would not be surprised at all to see weekly consolidation. Maybe the dollar bounce helps propel the commodities space, or at least metals, nope, not metals, at least oil and natural gas to see some weekly consolidation. That's something to be watching for as well. The general broader correlation between the dollar and commodities is inverse. We see it very clearly in the metals. It's not always as clear in oil and natural gas, and I would say it's the least amount clear in natural gas versus oil, but still something to watch. So the bull flag trade on Penn. So what I do when I look at a bull flag. So Penn all-time highs, the weekly bull flag confirmed But I was looking for an hourly bull flag entry towards the end of the day today. And I was watching it on the 5-minute time frame, and it looked like a bit of a falling wedge. So I saw this setup. And I said, okay, I want an entry in case the bulls run up into the end of the day. And I was watching this pattern at that point in time. This was as far as it had developed at that point, and it looked like a nice falling wedge. So I saw 57.19 as a low, and I saw this bounce here, and I said, and actually the bounce hadn't even really started much, but I said, all right, that looks like an hourly bull flag. There's two scenarios of what's going to happen here. I'm either wrong, and it's not a bull flag, and we pull back and break $57, and we're still looking for an hourly high or low, it just won't be a bull flag, or I'm right, we set an hourly high or low, and we make a bull move towards the high of the day into the close. So what do? I made an entry at 57.38, and that was after 57.19 had hit the low. I put my stop under 57. So I'm risking, let's say, 40 cents on this trade. And my target is a move to the upper 58s to close near the high of the day. If I get what I'm looking for, I sell half of my position, and I swing half of my position looking for new all-time highs tomorrow. So entered 57.38. I ended up selling half at 57.88, 50-cent gain. Reason being, I was just looking for a 15-minute lower high on that bounce, which was right here, because anything under 58.28 was just a lower high, and I did not think we could break that level on the initial attempt. And the other reason was that 50-cent move was my day maker level, as far as what my goal is for profit. So I said, all right, I'll take half off on that 50-cent move. And at that point, that drops my break even on the trade to under 56.90. So I'm now risk free. I cannot lose on this trade by keeping my stop loss. And I actually moved my stop loss up to on the second half to break even. And timing of the day had a lot to do with that. So it looked good. We're getting the nice bounce. I have some breathing room. Can we close up near the upper 58 so I can swing the second half of my position? I put my stop loss above 57 and put it under, or I just put it break even, 57.38 on the second half of the position, because my logic was, okay, we've got less than an hour and a half, less than 2 hours of trading left in the day. If we drop back to 57.38 after this bounce has started, the odds that we're going to close with bull momentum near the high of the day will decrease significantly. And I ended up stopping out, break even on the second half. So in the end, the trade was a half a day maker. I positioned myself with low risk and potential solid reward. It didn't play out ideally, but it was a win. So long story short, when looking for a bull flag and it looks like that low is probably set, I use that low as my stop. If it holds, it's a bull flag. If it doesn't hold, I stop out with a small loss and go on to the next trade. Hope you all had a wonderful day out there, and we will see you tomorrow. Have a good rest of your day. Planted this plum tree about a year ago, maybe 10 months. And the new growth that's exploding off of it, just that bright green color, you can tell it's really healthy. And its roots have taken hold. And this is going to be a good tree over the years. Behind it over here, one of my friends gave me a plant, some sochan, which is an edible. I believe there's medicinal properties as well. But just another plant that you can eat in the yard. I forget what kind of dogwood this is, but it's an edible variety, and I showed last year when it was fruiting. That was my first time ever eating it. Kind of like a little peach with a weird texture. Not ready just yet. So these are the Chinese snake beans that get 5 feet long, and they're already starting to explode. This is maybe 3 feet long. Very curious to see how these turn out.